Hi, this is Zak Mir with the Bulletin Board Heroes here on Share Talk for Monday the 10th of August. Starting off with Blue Star Capital, which is, there's a nice little setup here, this U-shaped bull flag as I call it, neckline there around 0.21, something like that, so end of day close above that today. And the shares could hit the top of that channel from last September up to 0.3 pence over the next few weeks. Big picture target, just to cheer up people who are waiting for a big result, is a line of resistance from April last year. In fact, April the year before, April 2018, up towards 0.42 pence. You also would notice that this is basically a double-headed, inverted head and shoulders pattern there from over the last couple of years. So the right-hand shoulder there and the neckline around 0.24, 0.25. So it looks like a good slow burn situation on Blue Star. A situation which is also quite slow, at least initially, was Eve Sleep. In fact, the detractors made you feel that the shares would never rally, but as you can see, that they did manage to break out mid-month last month and have done rather well since. Form resistance from the beginning of the year around 2.5 pence. And at least while we're above that, looking for the top of the rising trend channel from October last year up to 5 pence over the next 4 to 6 weeks. Ideally, there's no break back below that 2.9 pence low of today and of Friday. Gunsynd situation, which seems to have some people quite excited about its prospects over the near term. Here we've had, looks like we've got the fourth attempt at breaking that line of resistance from February, 0.8. I previously said above 0.8 we're going up to, or we could go up to 1.8, and obviously one bull trap there after I said that last month. Good bounce over the last week on the 50-day line, 0.73. But again, sustained action over 0.8 should bring out the big target there. If you're cautious on the shares, a break of 0.9 pence is the trigger, which is what I said the last time I covered the shares. Katoro Gold, the next contender. Here, a nice break of this near-term triangle for the shares. That's the April triangle. And the level that's broken on Friday at 2.4 pence, so above 2.4, looking for that February resistance line projection up to 5.5 pence, which in the current atmosphere with gold doing so well, one would hope would be delivered relatively soon over the next 1 to 2 months. Marechale Capital, a stock which has got a lot of interest amongst the Twitterati, or at least the Twitterati that I follow, and it's good to see that they're bet looks to be doing well. Initial target here previously was up to 1.8, 1.9 pence at the top of this rising trend channel from last year. Big picture target here up to 3.5 pence, which would obviously be rather exciting. That's a 2016 resistance line projection. And the upside valid, at least while we hold above recent recent resistance for the shares, which neckline resistance there around 1.2. So above 1.2, looking pretty set fair for Marechale Capital. Modern Water, another company which has decent social media interest of the right type. Slow players rather than fast money. Here we've had a break of the I suppose it's the post-March triangle there at 2.2 pence. End of day close above that should be enough to open up the prospect of a top of March trend channel target as high as 4 pence over the next 6 to 8 weeks. This stage only really back below the 50-day line at 1.91, and the March support line really kills the idea of a decent move to the upside. On to Orphan, which reported yet more decent contract news. We've seen the shares, as suspected on Friday, ready to break out. They broke that, they've broken that line of resistance from May. That line around 13 3/4. So end of day close above that, we should be on our way to the upside, and the long promised target to the upside through 25 pence, etc. Be cautious on the stock though, given that we have actually pulled back from 15 pence on 3 or 4 occasions in the recent past. Waiting for an end-of-day close above that may be the way to go if you are of a cautious nature. But at least while we're above 12 pence and the 50-day line, the shares look reasonably set fair, given the way that the 200-day moving average is currently dragging the stock higher. Sealand Capital, the next situation, very volatile stock, but I just thought I'd cover it again after Friday's break of that 20-day moving average and the July resistance line around 1.5 pence. All we're looking for today really is an end-of-day close above 2.3, which is basically near-term resistance and former neckline resistance. If we can get that, then the next level higher would be up to 4 pence for Sealand Capital. Stock which has come back after a rather quiet period, uncharacteristically quiet, is ValiRx. We've broken a July resistance line, neckline resistance around 9 pence. End of day close above that today obviously opens up the July peak near 12 pence, but prospect of a top of April trend channel target and retesting May resistance at 20 pence plus. Verditek is next, which was going great guns last week off the back of cashing in on £300,000 worth of warrants, which I think the bears haven't mentioned, and also the $2.2 million contract that came through as well. We tested former resistance as new support today, so former resistance 14.5, and the low today around that level. While we remain above the old July resistance, still looking for the April resistance line there up to 24 pence, and perhaps even the top of that January 2019 resistance line projection up to 25 or even 27 pence over the next month or so. Finishing off with a slow burner situation, which some people may prefer. We've got Xeros here. Here we see the shares trying to, they bounced off the 50-day line at 1.33 pence to start the month, and at least while we're above that, still looking for a top of March trend channel target as high as 2.2 pence as soon as the end of next month. That's it for me today. More updates tomorrow.